Well, Jerome Powell just finished speaking, and wow, there's a lot to unpackage. Let's get right into it. So Jerome Powell said something delicious and juicy. He says, look, the whole point of higher rates is to tighten financial conditions. He says, quote, that's literally how it works. And so what's interesting is you've noticed Jerome Powell and the Fed been a little bit more fussy and maybe hawkish, and look at what's happened to financial conditions. This is the Goldman Sachs Financial Conditions Index. The Federal Reserve started hiking right around this region right here. You notice that these financial conditions really started relaxing and actually even relaxed during the banking crisis. A little bit of a spike there, but then a relaxation again. We are almost at the tightest financial conditions now, though, that we've seen following bond yields now at almost 5% for the 10-year Treasury, at the geopolitical risks that we're seeing, the lack of a House Speaker that we're seeing. Right now, the 10-year is sitting at 4.96% after that presentation. That's up slightly. Oil's up slightly again at almost $92. These are some expensive issues that people are very concerned about, and rightfully so. What's interesting, though, is Jerome Powell says he talks to businesses regularly, and he finds that the economy is strong. The consumer is strong. Where there's pain is potentially amongst smaller, more cash-strapped companies, early-stage companies that don't have cash that they can invest in treasury bonds. For example, at HouseHack, we have money sitting in money markets or treasury bonds earning like 5 to 6%. It's crazy. It's amazing. Deadline, by the way, for investing in HouseHack is November 1st. That's the other Fed day coming up. But Jerome says, look, many forecasters were saying we'd be in a recession, and here we are. Inflation's going away, and we're not in recession. And he's not actually wrong. If I were Jerome Powell, I'd be cheering right now. I'd be like, bro, we basically didn't break anything. We still have under 4% employment. Jerome Powell's talking about how unemployment has not been under 4% for this many months in a row since the late 1960s. That's over 50 years, over half a century lows of employment that we're facing right now. Yet the economy is still moving and still chugging along above trend. Now, Jerome Powell thinks we might have to get the economy under trend to actually, and he says we're at trend right now with economic growth. He thinks we might have to get the economy below trend to actually reiterate we're not stopping until we get to 2%. But overall, so far, a lot of wins. What about the banking crisis? People say, well, of course. They created the money printer banking facility for that, which basically said, don't worry, if treasury yields go up and your bond values go down, fear not, we'll still lend you money assuming those treasury bonds are worth 100% because we could always just take them and wait till maturity. We got time. That basically overnight solved the banking crisis. Really, really incredible. Now, what I really want you to think about that he said, which was, in my opinion, somewhat, there were two game changers here, okay? One that I'm about to talk about, and the second one that Nick T pointed out, which I also noticed in his speech. The first one is that he actually showed us his hand. He said something that a lot of people missed. It just went right over people's head, below their knees. He said it really clearly. He said, look, if people seriously expect that we won't stop until we get to 2% inflation, then we'll get to 2% inflation. Then he said, if people didn't believe us, we would never get there. And I'm paraphrasing now, but he basically said, if we came out and said we're done and we're not trying anymore to get to 2%, then bond yields would plummet, bonds would rally, and financial conditions would loosen really rapidly. And then we wouldn't get to 2%. So basically, even though inflation is going away, and in his commentary, in his prepared speech, his prepared remarks, he basically suggested there's a lot of volatile data. We have inflation coming down. Inflation was really great this summer. We had a little bit of a pop in September, but that's probably just volatile data, and we don't really have to be that heavily concerned about that. We have to keep putting on the face of strength until inflation's basically meaningfully on its way to 2%. Because as soon as we say we're done, bond yields plummet. And that makes it harder to get to 2% in the first place. So in other words, even though we're trending towards 2% and everything's going great, we still have to pretend like everything is bad, because if we stop pretending, then we'll unwind the progress we're making. It's like a topsy-turvy world, but Jerome Powell is so clear about that. He is so crystal clear about that. There's no secret here. He's being very blunt and blatant about that. But everybody wants to forget that. There's this fear that there's actually still an inflation problem. There's not. And every inflation report that comes out, oh my gosh, there's a real inflation problem. There's not. Even in today's conference, Jerome Powell is very clear. Look, what caused inflation was a massive capability of demand coming at the same time as a supply chain shock driven by COVID. And even in countries that didn't print as much money as we did, they also experienced massive inflation because of these supply chain changes with high demand. But that's not what we have going forward. So he says we're basically on the trend to maybe even going below 2% inflation, just like where we were in 2012 through 2019. We can go back to that. And if something breaks, we're not up against the effective lower bound. That's a big deal. The effective lower bound, the ELB, is 0% rates. It's basically a way of saying if you're at 0 and something breaks, how do you cut? You can't cut. But we're at 5.25%. You have a lot of room to cut if something actually breaks. The second big game changer was what he talked about labor. This is something that Nick T from the Wall Street Journal pointed out as well. And as I went through the transcript the first time, I actually wrote wow next to it twice. I'm going to read you this because it's the most important part out of the actual prepared remarks. In the labor market, strong job creation has been met with a welcomed increase of a supply of workers due to higher participation and a rebound of immigration. Many indicators suggest, while conditions remain tight, the labor market is cooling. Good. That means less of a wage price spiral. Perfect. Or no wage price spiral. Job openings have moved down from their highs and are only modestly above pre-pandemic levels. That's a wow right there. In the past, he used to say, we want 1-to-1. Now he's like, we're only modestly higher on the jolts right now. This isn't that bad. We don't need to go to 1-to-1. He's basically undoing what he previously said. He's flip-flopping. He's like, 1-to-1's not that important. We're okay being modestly above. Otherwise, he wouldn't say it's modestly above. He would say there's still progress to be made. This is good. That's a flip-flop from the Fed. What's another one? The one that Nick T pointed out has to do with inflation. And here it is. Quits are back to pre-pandemic levels. The same is true of the wage premium earned by those who change jobs. Surveys of workers and employers show a return to pre-pandemic levels of tightness. In other words, remember how Jerome Powell is so worried about inflation coming from that third part. There are three parts: goods, housing, and then services x housing. Okay? Housing we know is coming down. Goods inflation is coming down. Put those off the shelf. What do you have left? Services x housing. Okay. What drives services inflation x housing? First of all, what is that? It's the person who cleans your teeth. It's the person who cleans your house. It's the person who does your tax returns, your lawyer, your funeral parlor. It's your veterinarian. It's your doctor. These are services, okay? Services x housing. Those prices go up when wages go up unsustainably. Jerome Powell basically here is saying wages are going back to what you would expect or would have expected pre-pandemic. What inflation did we have pre-pandemic? 1.75%. We had below trend inflation. Right now he's flipping. He's basically saying, look, we're not really, like between you and me, we're not really getting inflation anymore. Like the inflation problem's done. Now we have to be sure it's dead. And the way we're going to be sure it's dead is by pretending we still have to be at these high rates. If something breaks, we can cut. But until then, we'll just sit here at these restrictive levels. And we don't think these rates are too high because the economy's still doing well. But we're just going to sit here until we get to the lower rates. Because as soon as we signal that we're going to U-turn, bond yields will plummet off a cliff. And that'll loosen financial conditions, which could lead to grandma and grandpa going back on margin into Robinhood and YOLOing stocks. And then you get another bubble. That's what they're trying to prevent. So this is a manipulation. And he's being very transparent about it. He's like bluntly telling the economy, hey, I don't believe you that you are going to sustain 2% inflation, so I'm just going to ream you until inflation is 2%. So what does that practically mean? Well, practically means if you're investing in stocks, you can't be a little weenie baby. You're going to have to buckle up and realize it's still going to take time for stocks to moon and go to new highs. That's going to take time, and that's okay. That gives you years potentially here to DCA. And increase your position in stocks that you think will matter in the long term, 5-10 years out. I'm not here to advocate trading in and out every single day. You know, just because Elon's a little bitch doesn't mean we need to dump Tesla stock. Although some people are dumping Tesla stock because they're like, damn, he really a big problem. But anyway, we talk about that in a separate video. Point is, long term, Jerome Powell's pretty happy. Jerome Powell's winning. Jerome Powell is setting up for his statue because he is winning. and he knows he's winning. He just doesn't want to risk giving up. It's kind of, the way I think about it is, imagine you're on a marathon run, okay? And you're winning. You're in first place. You don't want to be the guy who slows down right at the end before the finish line, puts your hands up and goes, yeah, I'm winning. And then the second place person runs past you. It's happened plenty of times in sports, and it can happen with the economy as well. Jerome Powell's in first place. He knows he's winning, and he doesn't want to F it up. What else did he say? A little bit of talk about the Phillips curve, big deal. It's flatter than you would expect. He talked a little bit about how he felt in 2012 when everybody's like, we're going to have inflation. And this is actually funny. He's like, oh, everybody in 2012 is like, there's going to be so much inflation. And he's like, bro, there's no inflation. And then inflation's low for like 8 years thereafter. Like, he's like so clearly telling you the roadmap for the long run. Again, short term sucks. Long run, he's like very clear here. This is actually very transparent. Banking crisis, we have a facility for it. No major risks to banks from a commercial real estate shock. Could there be more shocks? Of course. Interest rate spending sectors are starting to show pain. That's housing, that's cars, that's Elon Musk. But we still have strong demand, strong savings, higher than we expected. Let's see here. 5-year break even, by the way, up again, 2.4%. 5-year forward break even, 2.5%. In the past 25 years, we may have had lower inflation, though, because of aging and higher savings. He does think there is a risk that the neutral rate will be higher going forward. But quite frankly, he has no effing idea what the neutral rate is going to be, and nobody does. We can only speculate on it. I speculate that it's going to go back and probably be even lower thanks to competition and innovation. He thinks it'll be somewhere in the middle. Some people think it'll be even higher. That's like, we can place bets on that. That's crystal ball stuff. That stuff doesn't matter right now. But the point is, this is a pretty neutral speech. I don't think this is the dovish Jerome Powell people were hoping for, though. As soon as you get a dovish Jerome Powell, yields plummet and all the stuff that they don't want to happen happens. So this is not unexpected. What also should not be unexpected is the deadline for HouseHack, November 1st. Make sure you go check out househack.com, read the offering circular, and get involved in HouseHack if you want to be involved in a startup. We'll be posting a lot of HouseHack videos over the next 2 weeks to show you some of the progress we're making and how fast we're making progress. Really, really exciting. We got to hit the disclaimer. Keep in mind, I am a licensed financial advisor. I'm becoming a licensed stock broker. Already passed my Series 7 and other related tests. And I am a licensed real estate broker. But despite all of this video is not personalized financial or real estate advice for you. I'm not short the market, long some of the stocks that I mentioned. So I got to be clear about that. This is not tax, legal, or otherwise personalized financial advice. This video is generalized perspective. This video is not and shall never be deemed reasonably sufficient information for the purposes of evaluating a security or investment decision. In other words, good luck. I love y'all. I'll keep bringing updates to y'all. And you know what? I'm going to keep speaking my mind. Because all the little weenies who are like, oh, Kevin's only mad because of this, or, oh, Kevin doesn't see this. I see you. I hear you. If you have a good perspective, I'll say you're right. And if I think you're wrong, I'll tell you I think you're wrong. But one thing we ain't doing anymore is caring about the Karens. All right, folks. I appreciate y'all. We'll see you in the next one. Goodbye. Good luck.
Why not advertise these things that you told us here? I feel like nobody else knows about this.
We'll try a little advertising and see how it goes.
Congratulations, man. You have done so much. People love you. People look up to you.
Kevin Paffrath there, financial analyst and YouTuber. Meet Kevin. Always great to get your take.